Hi traders, this is Forex James. I wanted to share my insights on the head and shoulders pattern. So I'm sure most of you have probably heard this name. It's a very reliable reversal pattern that happens on the extremes of the market. And let's take a look at a few examples and the few variables of the pattern. Left shoulder, head, right shoulder, break. Right? This is one. The neckline is slightly to the upside. And there's another kind of head and shoulders with a more horizontal neckline. Another one here. Okay, also a diagonal neckline, but it's tilted to the downside. Okay, so the patterns may vary slightly, but they all convey the same meaning, which is exhaustion and a change of direction. Okay, that means a new opposing force is going to take over the markets. As a discretionary price action trader, I don't just trade these patterns, but instead I try to figure out what price is trying to tell me. For example, if this happens in the right context at an extreme, and I'm seeing candle bodies or wicks here that are telling me that an exhaustion is happening, then I would apply this pattern in my own trading. There are many factors I look at besides just looking at the pattern blindly. So before we jump in on how we could trade these patterns, let's try to spot them in the charts. Okay, so we have the EuroCAD daily chart here. These horizontal blue lines are just support and resistance lines. You can see them more clearly on the weekly. So we're at an extreme here, right? And this is a line that's been tested before, and it coincides with many other turning points. So on the daily, as you can see, I was able to spot the head and shoulders. This is the first part here. Left shoulder, the head, and the right shoulder. And here's the neckline. Okay. Here, another one, but with a diagonal trend line as our neckline. So how do I gather all this information and put it into trading? Okay, so first, the main purpose of this pattern for me is to tell me that the direction is about to change here. Okay, remember, it's about to change here, and it's only confirmed when it breaks the neckline. All right, so from this point onwards, I'm only going to be looking for longs until it hits an extreme turning point in the market. So for example, I could have gotten long here in the pullback, or another long here, or just simply a long on this break of the neckline. Right, that's one way. If you're more aggressive, for example with this pattern, again, the direction is only confirmed after the break of the neckline, but looking at price section here, one could probably take a buy trade over here. A bounce off the neckline. Once you see a bullish candle here, there's not a lot of profits to be made. It's quite risky. Or one could simply wait for a pullback of the right shoulder and enter a short at this point. Okay? This has not, remember though, this has not confirmed a direction change. It's only telling me that potentially it may change. So it depends on the level of aggressiveness of a trader. There are many ways to trade this pattern. Let's take another look on the pound kiwi. So the pound kiwi is more of this variable here, right? As you can see here, this left shoulder actually already made a new low. It broke the previous swing low here, right? But however, it made another high. This can trigger some people into going shorts, which is a fake out, but instead it made another move to the upside, right? At the end of the day, price has to break this neckline because remember, for downtrend, price has to make new lows, lower highs and lower lows, right? So at one point of the chart, whether it's after the right shoulder or after the left shoulder or after the head here, it has to break this point, the previous swing point, and make a new swing low here. So remember, guys, instead of just trading these patterns blindly, learn to be able to read what the market is telling you. Look at how the candles form in this area and try to decipher if the bulls are indeed losing and the bears are winning. Okay, you can look at the candle wicks or the bodies, right? So again, just to recap, there are many ways to trade this pattern, right? You can trade a bounce off this uptrend line to make a quick scalp, or you could already start selling at this point when it retraces after this big move, or you could simply wait for a breakout if you're a breakout trader. At the break of this trend line or the neckline, you can go short, or some pullback traders may even wait on the retrace to retest the neckline here. All right, enter short here, then bam. Let's analyze another head and shoulders pattern, okay? Here's another pattern which I consider to be head and shoulders. It's quite different from the three patterns I've drawn over here, okay? Left shoulder, this is the head. And you could either call this the right shoulder or this the right shoulder, okay? Right? See how many variables there are? But they essentially mean the same thing. You have to kind of figure out, because this is essentially a range here. So find out if you can draw the trend line horizontally or diagonally. And looking at this, knowing this piece of information here, you could make use of trade opportunities here, right? As I've mentioned before, one could have gone long over here, another point to go long. Or if you are a retracement trader, you wait for a retrace at this point or at this point. Or if you're a breakout trader, you wait for this, right? Let's zoom in and talk about these candles here, okay? Price made a new move up. It formed a wedge here. This is a narrowing wedge, right? A narrowing wedge, it's a sign that price is compressing and it may make another move to the upside, okay? And the breakout happens. And look at this huge red candle. It just implies that the bears are, this is where the sellers are coming in. So again, depending on your trading style, if you are a more conservative trader, you could simply wait a break of this. For me personally, Um, I like to dance the markets. Although this is telling me a short, if I can make some quick bucks to the upside with at least a 1-to-1 ratio, I'll do it anyway. This is in fact another pattern. This is a descending triangle. So just to recap this video on head and shoulders. So first I'll look for extreme points in the market. I use this pattern as a confirmed direction bias. See this one here? Alright, this means that after this point onwards, I'm going to be looking for sells. This head here, which is the highest point, marks the turning point of the market. Okay. Pay attention, in this case, to how the bears are jumping in, how the sellers are willing to sell. Okay, this is the break of the previous swing point. It's not wrong if you draw your trend line, your neckline like this, or you can draw it like this. But my point is, pay attention to this new swing low here, which signals a direction change. Okay, that's what I meant by the engulf. I hope you find this information useful and you can apply it to your own trading. Let me know your thoughts in the comments below, and thanks for watching, guys.